Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really happy to have Alasdair Macleod with me once again. Backed by popular demand, and given the fact that I find his market insights so valuable to me personally, Alasdair has been one of our most frequent guests, and he has worked as a stockbroker in the past, as a banker and an economist, and he is currently a senior fellow at the Gold Money Foundation and head of research at Gold Money. Thank you for joining me again, Alasdair.
That's my pleasure, Jay.
You know, I'd like to tell our listeners before we go any further, they should go to goldmoney.com to catch up with Alasdair's weekly missives, essays that he provides that I think are very thought-provoking and I think very correct in terms of his analysis of what is really happening in the markets. The underlying dynamics that might not necessarily be talked about that much in the mainstream, perhaps partly because people just don't have the attention spans to think through things. But Alasdair's articles are very well written and easy to follow if you have an interest in really trying to understand why the markets are behaving the way they are. Alasdair, I'd like to focus mostly today on your June 20th article titled "The Financial War Escalates." And in the introduction to that article, you stated the following. You said, and I quote, "Behind the scenes, the financial war between America and China is escalating dangerously into a war to secure global financial resources." So I'm wondering if you could give us some examples of rising conflicts that are there to secure financial resources.
Well, we've known that there is a financial conflict between America and China for some time. And a lot of the reason that China, I think, has been building not only its own gold reserves, and I don't mean the sort of £10 a month that they're adding at the moment, but the more serious, undeclared bullion holdings that they have, which they've accumulated really between 1983 and the year 2002, but also the fact that they've encouraged their citizens to buy and invest in gold, and they've accumulated separately from that. I mean, I've seen estimates of about 17,000 tons. So you can see that the strategy from China's end is to take a very different view from America when it comes to fiat currencies. And at some stage, it is absolutely clear that they will intend to be completely independent of the US dollar. Now, the loss of that international role for the US dollar for 40 to 50% of the world's population, I'm talking about the whole of Asia basically, is a very, very serious matter because the Americans use the hegemonic status of the dollar as the means of financing their deficits. The deficits are financed very, very much by foreigners buying dollars rather than US citizens, if you like, saving and then putting money into US treasuries. And the problem that we now have is that there is an enormous slowdown in cross-border global trade. Now that has been so sharp and sudden. I think it's that the figures are still coming out on that, and they tend to surprise on the downside. As well as that, of course, it is affecting domestic production for many countries, including America. And the effect of that is that if you get a very severe economic downturn, which I have argued is going to happen because you've got a combination of the end of the credit cycle, and after the end of the credit cycle, you get a credit crisis. And on top of that, you have almost a Smoot-Hawley Tariffs Act come credit cycle ending twin, the other twin being 1929 to 32. Now, obviously, we hope that what happened then doesn't transpire this time, but I think there is a very serious danger that there is going to be a very substantial downturn in the global economy and also in the US economy. The effect of that is that the budget deficit in the United States will increase very substantially. Now, this gives the Americans a problem, because the foreigners are no longer buying dollars. And the reason they're not buying dollars is quite simple, and that is they don't need them. They've already got an enormous quantity. I mean, if you look at the total of their investments in US treasuries, property, real estate, equities, corporations, that sort of stuff, plus their cash on deposit, which is around about $4.5 trillion, you're looking at a total of over $22 trillion, which is roughly the GDP of the United States. So the myth that everybody has been talking about, there's a shortage of dollars and all the rest of it, is simply not true. There are too many dollars in foreign hands, and when things start going wrong, the foreigners start selling their foreign currencies. It's as simple as that. Not because they don't like the dollar so necessarily, though I would argue that people like China really don't like the dollar. But principally, they just don't need them. And they need to have their financial resources back at home, protecting their home base. So you can see that in those economic conditions, the sort of the flows that have been going out of every country because of the prospect of increased trade and all the rest of it start reversing. Now, at this time, as I said earlier, you will find that the budget deficit starts accelerating quite substantially. And you could easily be looking at revisions. I mean, I think the current year's budget deficit is expected to be around about $1 trillion. In a full year, that's going to go up to over $1.5 trillion. And it's going to look like that for some time. So what happens under those circumstances? Under those circumstances, America has to do something to attract the portfolio flows back into the dollar. And it does that by trying to trash the regions where those flows go. And that brings us to China. China has this plan to invest an awful lot in her own infrastructure, and indeed throughout the Asian continent with the Silk Roads and all the infrastructure that goes with that. So China needs to attract foreign currency through Hong Kong, through the Shanghai Connect link, into China and also into the Asian, I can't remember what it's called now, the Asian Infrastructure Development Bank, which they set up in Shanghai. So China needs those funds. America needs those funds. That basically is the battle that we face. And it's not going to be, it is a severe escalation of the situation, which we've had over the last 3 or 4 years.
Okay, so something's got to give, and I want to get into some of the dynamics of what you talk about in your article that's going on there. But just as an aside, of course, Alasdair, 2008, 2009, there did seem to be a dollar shortage when the system went into reverse, when we had the financial crisis. And you know what happens when when you have something like that going on, the margin clerk calls for the loans to be repaid. Everybody has to sell whatever they can, whatever is liquid enough to sell, and the dollar got stronger relative to other currencies during that time frame. Of course, once they started QE, it reversed. But isn't there the prospect of that happening first, where you might see a collapse in prices and a stronger dollar?
On a credit crisis, what you say is true. There is a heavy degree of liquidation. But what you were describing was essentially a dollar shortage that was occurring in America. What we're now looking at this time round is the foreigners have added a lot to their dollar investments and their dollar cash, and I don't think they're quite in the same position to be squeezed, if you like, as happened last time. I think the best way to look at it is you have described exactly what was happening internally in America. You had the U.S. banks trying to call in loans from American residents, American citizens. I'm sure on the margins there were foreign borrowers of dollars in the same situation, but that was not the basic problem. The basic problem was in America. I think it's people who talk about this a lot seem to think that Turkey, for example, can only borrow in dollars because their own currency is rubbish, and nobody will go and buy Turkish lira in order to lend money to the government. So when you get a problem with the Turkish lira, then obviously people start talking about, well, they owe an awful lot of money in dollars. It's going to cost them more lira to get those dollars back, and so on and so forth. Now, that is the sort of crisis that you can get. And that is part of the strategy. And this is from the Chinese point of view rather than my point of view. But the way the Chinese look at it, and they've observed these cycles going all the way back to the Latin American crisis in the 1970s and the late 1970s. They have seen basically it's a sort of buy, puff up everything and then dump it type strategy. And basically, there comes a point where America wants all that money back for her own purposes. And what she does is she will crash another economy. And the example of the Latin American economies, I mean, they all crashed at more or less the same time. Southeast Asia, again, all crashed in 1998, 97, 98, I think it was. And why? It was because money was going back into the dollars. Now, we all assume as observers that money going back into dollars was basically money which, for various reasons, had become too speculatively involved in, let's say, the Latin American countries or indeed Southeast Asia. But the way the Chinese look at it is basically that's not quite it. What happens is the Americans pull the rug out from under and cause the flight to go back into the dollar because they need the investment resources to fund their budget deficits. Now, it's an interesting point of view, and I can't argue too strongly against it. I don't unreservedly accept it. But the point is that is what the Chinese think, and this is why we should pay attention to it. It was something that their chief military strategist came up with, and he informed the Chinese leadership and the army exactly what these tactics are. So that is what they expect. That is what they see. So they are on high alert to protect themselves. And from their point of view, they see the riots, the demonstrations in Hong Kong, as being the initiative, if you like, of the American intelligence services. Why? Because they want to stop the Chinese Connect working. They want, if you like, international portfolios to take their money out of China and redirect it at America. That is the Chinese suspicion. And so we have to pay attention to how they think about this particular matter.
Well, if we look, Alasdair, whenever there is a war or a crisis or whatever, countries are, when there's risk involved in investing in a certain area, if you can create chaos in that market, in those countries, then the capital that's there is looking for a safe haven. They're looking for a place to get out. And what is more liquid, what is more solid, it seems, among all the fiat currencies of the world than the U.S. dollar, right? So it makes some sense. Maybe that's what's going on in Iran, perhaps, as well?
Well, I think that is certainly a possibility because, they stir the pot in Iran, as it were, which again puts people off putting money into, say, infrastructure in Saudi Arabia or helping to rebuild some of the nations that the NATO allies have destroyed, like Iraq, like Afghanistan. Now, Afghanistan's another interesting one because, of course, you've got enormous untapped resources. So there's an extra reason why we all want to stay in Afghanistan, and that is to keep the Chinese out of Afghanistan and getting hold of all that wonderful gold, silver, and everything else there is there. So it's this is something that's going on in the background, and I think that the Occupy Central thing in Hong Kong back in 2014 failed to tip the balance. It did actually cause the Shanghai Stock Exchange to fall very, very sharply. But now we have the same thing being played again. It hasn't been finished. The Chinese have backed down on the bill to take criminals back into China. The extradition bill that has now been put on hold. So the Chinese, I think, are trying to play this one very, very carefully. They want to be strong, but at the same time, they have to be a little pragmatic. So it's interesting. And of course, the whole Huawei thing is all part of this, too. America's been running around telling all her allies, don't under any circumstances do business with Huawei. And, the excuse is quite simple, that they say that it gives them the ability to spy on you. Now, I don't know about you, Jay, but if I have a Huawei mobile phone and it works extremely well, I'm not sure that the Chinese are going to get any mileage out of spying on me. But once you sort of put the thought in everybody's head, of course, you can see what happens. It's very destructive of business.
Yeah.
And this is very important because they've got a leading role in 5G. And, so that's another aspect of it. America does not want to see Chinese technology overtake American technology.
Right. No, that's right. It's all about monetary. It's all about material power, global power, and so forth, I guess, isn't it? And to what extent do you believe the Chinese are, in fact, building up their military capabilities?
I think I'm sure they are. I don't think they have any intention of entering into a military conflict. But you can see that it's rather like a game of chess, isn't it? You move your pieces, if you like, to protect a particular area. And the particular area that we can see being protected is the South China Sea. I think that China would like to exploit that a lot, and I suspect that their long-term planning is, first of all, secure the shipping routes, as justifying thereby the building of these defense positions on the various reefs, which are claimed variously by Japan and the Philippines and so on and so forth. And I think the next stage will be they want to start exploring for oil in the South China Seas, and they will claim those new bits of territory, if you like, should be taken into account in any international treaty, carving out the area, if you like, of exploration in South China Sea. So you can see, yes, they're pushing the boundary the whole time. That is the way of it, and I think that America is very worried about losing its influence in the region. So yes, you're bound to get a build-up of military capability, I think, as the background to that, because we all know the basic rules of not having war. Basically, you talk pleasantly but carry a very big stick.
Right. Yeah. So. So the oil, how important is oil because of the petrodollar? Mostly the United States wants to retain, I don't know if Trump understands this, but certainly the U.S. power has been able to be expanded since we went off the gold standard by using this dollar that we could create out of nothing, the petrodollar, as it were. And so to what extent it seems like wherever there's oil, it tends to be more military conflicts, more international conflicts. So you mentioned oil in the South Chinese Sea. You mentioned, Afghanistan and their minerals and so forth. I know there's some, I guess, a lot of minerals there that haven't been exploited. What is China going to do, though? And how do you see this thing being resolved, Alasdair?
Well, I don't really see it being resolved. I'm afraid that the financial war is likely to escalate even further. And if I can pick up your point about energy is actually fundamental to everything.
Sure.
And the deal which basically Nixon and Kissinger put together with the Saudis back in 1973 was, okay, we'll let you, price oil as you want. We can't stop you. We can't stop you doing that.
Right.
But the one thing we will insist is that you take payment in dollars.
Right.
And what that meant was that every oil payment was lodged with a U.S. bank. They called them money center banks in those days. And those banks that could then recycle those dollars for other uses. And a lot of them, of course, went into pockets of the generals in the Argentine and all the rest of it. And that was what led to the boom, if you like, the financing boom of South America and the subsequent collapse of South America. And a lot of those dollars also went into funding the tendency, the growing tendency for the U.S. budget to run in deficit.
That sort of helps explain now why the oil price went bananas after that in the 1970s. As a matter of fact, it'd almost be to the benefit of a strong dollar to have a higher oil price, because that would mean more dollars would be demanded around the world to buy oil from OPEC, right?
Yes, that is correct. I mean, it seems bizarre, but this is really at the heart of what has been described as the Trifid Dilemma. Yeah. Basically, you need rubbish policies to support the status of an international currency, and that, of course, is what America has been doing ever since the Nixon shock in 1971.
So you don't see a resolution anytime soon, with just about 3 minutes or so left to go here. How is this going to impact as this war continues to accelerate and I guess get worse? I mean, we can hope and pray there's no hot war, there are hot wars. The U.S. is involved with dropping bombs everywhere, it seems. I mean, wherever they feel they want to change a regime or whatever. Trump seems to be pushing back a bit on that. But what's this mean for our markets? That's the bottom line as far as we're concerned here to a great extent. What's this mean? You mentioned China's been importing and building up its gold reserves. It's the largest gold producer in the world. Russia's joining as an ally of China. We're forcing the two together closer and closer. Iran, Turkey, possibly some of these countries. What's all this mean for? I guess what you're really concerned about is an enormous amount of money printing that could result in a substantial amount of inflation, so that tangible assets might rise in value relative to a declining currency. Is that the bottom line?
Yeah, at the end of the day, but it's going to be a very rocky road before we get there. I mean, look at property, for example. Most property is financed by borrowings. Yes. And if you have an inflationary collapse, the first thing that happens is that people can't afford to repay their mortgages, and so property prices collapse. Now, there does come a point, obviously, where you should start picking up property and so on. But by far, the best asset under those circumstances is gold, sound money, silver, perhaps. As well. And there is another thing that's happening, and that is that the millennials are buying into a new story, and that is Bitcoin in particular. Right. Now, I don't know that Bitcoin is going to last forever. I would certainly not claim for that. But I think it could actually make the next credit crisis quite a bit worse, because it provides an escape route. And it's also educated an awful lot of people who otherwise wouldn't have been educated about the downside of fiat money, fiat currency, and why it is likely to collapse. So it's a very interesting and complex situation developing, but basically go for sound money.
Okay, and real quickly with 30 seconds left here, Alasdair, silver, you indicated before we went on the show that you're going to be writing an article on silver. Give us your quick thoughts on silver. Why is it not participating with gold?
I think this is fascinating. The article will be published on Thursday. I don't think I got time to go into it, so I would ask your listeners to
just go to goldmoney.com.
Gold Money Research Insights, and you'll find it there from the afternoon U.S. time on Thursday. But basically, I think I have managed to uncover what has been happening in the silver market, and I can tell you that there is someone who has built up a huge position, long position, and a lot of the big boys in the market who have gone short against this, effectively they're short against this big position, don't actually understand what's going to happen to them.
All right, we'll have to leave it go at that. Thank you so much. It's goldmoney.com, folks. You want to go there and catch Alasdair's article.